The big problem that we're focused on solving is the challenge of housing access. So OwnHome was founded in 2021. Now we're a team of 40. We're on the cusp of hitting profitability, what we see as one of the most urgent social challenges in Australia, which is the challenge of housing access, the challenge of housing affordability. So at OwnHome, we're rebuilding the home buying journey from the ground up. And so the reality for younger Australians today is that it takes them more than a decade to save up that 20% deposit. And so what we've seen is that families are crying out for help. The system today is really rigged against you.
Hello and welcome to Fintech Chat, the show where I connect with fintech leaders for a bit of a chat. Today's guest is James Bowe, the CEO and co-founder of OwnHome. James, welcome to the show.
Great to be here, Dexter. Thanks for having me.
So your Fintech Chatter debut, we've been talking about doing this for a little while. Could you tell our listeners a little bit about OwnHome and the big problem that you solve?
Yeah, and Dexter, it was great to see the shout out and appeal for businesses that were really focused on what we see as one of the most urgent social challenges in Australia, which is the challenge of housing access, the challenge of housing affordability. And so at OwnHome, we're rebuilding the home buying journey from the ground up, starting with the people that are locked out of it entirely. So the big problem that we're focused on solving is the challenge of housing access. And so the reality for younger Australians today is that it takes them more than a decade to save up that 20% deposit. And what they're finding is that the goalposts are constantly moving on that journey. And the reality is, if you don't have access to intergenerational wealth or family support, the system today is really rigged against you. And so our solution is a really straightforward one, but it's also incredibly powerful. And that's a solution where we fund the deposit that banks would typically ask for in order for you to access the lowest possible rates and avoid costly lender's mortgage insurance. And so what we unlock for families is the ability to own a home today rather than a decade or longer in the future. We empower you to have access to the lowest possible rates. And we arm you with a buyer's agent to support you on that home purchase journey. And so that last aspect of the advocacy support that we provide to all of our customers was really born out of an observation as we were focused on that deposit challenge. We discovered that most Australians don't just need support with overcoming the deposit hurdle. They also need support in having the confidence to act and transact. And so what we've seen is that families are crying out for help, not just with that deposit, but with the reality of navigating that property market. How to interpret a price guide, what to buy, where to compromise. And so that's been a really exciting expansion of our vision.
Awesome. So how did the idea for OwnHome come about?
Well, the genesis for the idea in and of itself is not necessarily earth-shattering. I think it's a problem that my generation finds itself thinking about almost on a daily basis, maybe more than virtually any other. How can I possibly achieve some semblance of financial security? And so for myself and Tim, my co-founder, we found ourselves sort of constantly circling this problem of housing affordability and housing access. And I'd say, with a healthy amount of naivety, felt that this was something that was actually in our circle of competence. It was, first and foremost, a financial and legal structuring problem, and one that it looked like there were a bunch of incumbent profit pools that weren't necessarily incentivized to focus on solving that challenge of housing access. And so we set about thinking long and hard about how can we apply our minds to that financial and legal structuring problem, and set to work on building OwnHome.
Despite fintech being around for the last 10 years, the problem's got worse, it's not got better. What do you think kind of now you're kind of seeing with things like product and innovation around product or process and system or legislation, that the things that need to be innovated on to actually solve the problem?
It's a really good point. I mean, the deposit hurdle has been a challenge for many, many decades.
Yeah.
And there's been a whole host of solutions that have come in waves. One of those was actually the government back in 1965 starting a effectively the lender's mortgage insurance
Yeah.
market. And so that was a public offering. It was only privatized actually in the 90s into what became Genworth. And so oftentimes in some of these enormous social challenges, the government has been one of the first movers into this
Yeah.
space. I think we've seen over the last decade that this challenge has become more urgent, and we've seen that it's attracted the attention of all levels of government, but it's also attracted, encouragingly, a lot of private investment into this problem space. I think we saw just most recently an election that was really built around or focused on the challenge of housing access and housing affordability. And there's been a host of sort of solutions that are going to be coming to market, including the expansion of the first home buyer guarantee scheme. I would add, I think it's a no-brainer that we should demand of the government more on the supply side. And as we look at some of the supply challenges when it comes to housing, there's a lot that the government can do there to unlock and encourage supply, not just the demand side. But here at OwnHome, we're focused on supporting people in having access to housing. But we know that that's only structurally effective so long as there's equivalent efforts on the supply side.
So I noticed you used the word access rather than affordable. I guess one of my questions was going to be, every time the government does seem to intervene, it increases prices even further and kind of makes it less affordable. What do you think is I know we're kind of talking semantics here, but I think it's really important. How do we switch the conversation from this thing of affordability, which if you're on the housing market, or if you own a home, you're thinking, well, hang on, that means I've got to lose equity in my home to make it affordable for everybody else. What do you think the conversation needs to be to get everybody engaged and kind of unified on, hey, this is the problem that we're actually trying to solve versus, everybody going off in different directions?
Well, I think both of those challenges are and I do think of them as distinct challenges. The challenge of accessibility and the challenge of affordability are enormous and pressing. I think some of the solutions that try to solve both at the same time with a silver bullet can become incredibly complicated. And so I think some of the government shared equity programs are, I guess, focused on affordability. In the sense that it's not adding necessarily to monthly repayments, and it's expanding the amount that an individual might be able to purchase. But it can become quite complicated because now you've got the government owning a part of your property. And I think we saw some of those policies being made up on the fly of what if I renovate my kitchen? And they're like, easy, we'll just value the kitchen. And I think when I speak to banks that are being asked to support those programs, they're asking themselves, is this a proposition that we can get behind given its complicated nature for aspiring homeowners? And so I think in this space, when you do try to solve both at the exact same time, things can get complicated. That said, I think there needs to be really dedicated efforts on both sides of the equation there.
One of the other questions I wanted to run by you as well is really around the process that you've got around credit risk management and how you assess people. And I think one of my frustrations, I'm sure you experience this as well as a business owner, is despite the fact that we could be very successful and affluent, we're kind of not considered that when it comes to considering a mortgage. We work in an industry where we've got a lot of people who are what I would describe as the kind of participants in the project economy that might charge huge day rates and go and work for 6 months at a time and earn a lot of money, but then go off traveling for 6 months. And it's very hard for them to show, hey, look, I've got a permanent job and I'm not going to get sacked. How have you gone about the credit risk process with your loan product?
Well, one of the biggest myths that pervades in this country is that if you don't contribute a 20% deposit, you're somehow less creditworthy than someone who does contribute a 20% deposit, say. But the reality is that when 60% of successful home buyers are relying on intergenerational wealth to bridge that deposit gap, that's not a deciding factor in whether or not you're creditworthy in terms of like your probability to default on that loan.
Yeah.
And the great news is that we're not flying blind here in terms of the creditworthiness of lower deposit aspiring homeowners. We've got an immensely rich data set in the lender's mortgage insurance market. And then more recently with the first home buyer guarantee scheme, we actually see the performance of those on the first home buyer guarantee program outperform the broader market. So though, like the arrears rates are far lower than the
I was going to ask you that actually.
Yeah.
Like, how many claims are there with that lender's mortgage insurance? Because to me, it just seems like the biggest waste of capital going into something that we've seen nothing but house price increases over the last, how many decades?
Yeah.
When is there an instance whereby that lender's mortgage insurance is actually activated?
Yeah, I mean, it's been a long time since I think that industry has seen like large claims. Maybe back in 08, and I think those lenders' mortgage insurance providers would be the first to acknowledge that even those claims were more a consequence of some like individual bank policies rather than anything in particular. Like if I think about profit pools in Australia and which ones are like what I would describe as lazy profit pools. Lender's mortgage insurance to me stands out as one of the laziest profit pools in the sense that it's like something like 5 to 10% of premiums are paid out as claims versus maybe like a general insurer where 60% of premiums are going to be paid out for, you know, like a cyclone or flood damage. So that's 95% of those premiums are like free money for the lender's insurance providers. And so that's why, you know, Helia, which used to be Genworth, is one of the best performing financial stocks for the last, you know, decade. It has been a free money machine for them. And so to us, like that, as we looked at whether or not there was like a ripe opportunity here, the presence of that lazy profit pool stood out to us as like one where the incumbent wasn't necessarily like incentivized to radically solve this challenge. And two, it meant that there was an opportunity to build a fantastic business with really sound unit economics that was still a far better proposition for aspiring homeowners.
What have you found, I guess, just generally within the industry has been the kind of collective consciousness around solving, because there's a lot of nuance to all of the problems around kind of being, coming up with innovative solutions, and how receptive have you found kind of government and regulators to wanting to actually, solve the problem and recognize that, hey, lender's mortgage insurance is a lazy, kind of form of capital?
My sense is that the capital return for lenders' mortgage insurance providers is largely solving for systemic risk on the part of banks. And it's incredibly important to think through what's the worst that can happen. And we are a credit provider. And so all that our funders care about are the downside scenarios. That's entirely what they're focused on. And that's also entirely what APRA is focused on when it regulates lenders' mortgage insurance providers. But if what we knew to be true is that there was a different type of risk capital that could be applied to this problem that wasn't solving for what lenders' mortgage insurance is solving for. Lenders' mortgage insurance is insurance for the banks. And so the APRA is concerned and entirely focused on depositors with banks and the systemic risk of banks, given that they are one of the most like leveraged institutions in the economy. And so as a result, the capital requirements that they impose on LMI providers are really exorbitant. But that's because they're solving for the systemic risk of the banking industry. What we're really focused on is delivering a fair and reasonable return to capital providers who are funding that deposit hurdle. And we're actually taking systemic risk off the banks. So instead of the banks extending that aspiring homeowner 95% of the value of the property, they're now only extending 80%. And so just to draw that out, under lender's mortgage insurance, they've extended 95%. If there's a property downturn, the bank has to, and they lose some money, they have to turn around and make a claim, just like you would, if there was a claim for flood damage to your house. And so that claim is obviously only ever as good as the insurer is. And so APRA looks at the rating of the insurer versus the rating of the bank and only gives them, X amount of capital protection and treatment. For us, we're actually funding that deposit. So the bank has only funded 80% of the value of the property. So if there's a 10% downturn, there is no claim that the bank needs to turn around and make in order to protect its capital. It hasn't lost anything in that equation. So OwnHome is the risk capital, and our funders are providing the risk capital, and they're taking it out of the banking system as a result.
So when you've kind of taught me through the actual OwnHome business model, we've kind of got some, what I'd say are traditional models, the two-sided marketplace, for example. Essentially, there's a two-sided marketplace where you've got to get funding, so you're kind of working with the banks on one side, customers with the other, which is complex in itself. But you also got this buyer's agent part of the business as well. What challenges have you found in kind of trying to bring all three components together into a kind of a homogeneous solution that actually is going to become a profitable business?
Yeah. So I'd more frame it as what opportunities have we uncovered as a result of this effort. We're really not afraid of service-based businesses in pursuit of building a really differentiated proposition. The way we think about it is we'd be far more fragile if all we were was a capital provider rather than a differentiated service provider. Because then we'd just be in a race to the bottom on cost of capital. And as you go through that crawl, walk, run funding journey, there are typically always players with larger balance sheets, access to lower cost of capital. And so if you want to build a differentiated proposition as a lender, I think it's incredibly important to deliver a differentiated experience. And for us, for both the borrowers that we work with, but now also increasingly the brokers that we work with, the differentiating experience of the OwnHome proposition is the advocacy that they receive from that embedded buyer's agent who helps them on that journey. And what that's meaning for brokers now is actually that they're seeing the power of their clients, where previously they would have played part-time therapist, property analyst, counselor on that journey. They're able to now, so can we do that one again?
Yeah, sure.
Sorry.
Just when you're ready, just go and I'll just edit that question and then kind of cut into.
And so this is what are some of the successes?
Yeah, so just a little bit about the history of the business, where you started, kind of how many people you were, where you've got to now, some of the successes that you've had.
Awesome. So OwnHome was founded in 2021. Now we're a team of 40. We're on the cusp of hitting profitability, which is incredibly exciting.
That is exciting.
It is really exciting.
Yeah.
Thanks, Dexter. And we're now, in terms of some of the more recent successes, we've just recently partnered with some of the largest aggregators in the country. So LMG, Finsure, Connective, and we've got an exciting partnership coming up with Aussie and Lendy that will be shortly announced. And we're 100% focused now on supporting brokers in transforming their own business as a result of some of those distribution partnerships. And another really exciting sort of successful venture is the launch of our own dedicated buyer's agency, which is Peach Property, and is now becoming one of the most decorated buyer's agents in the country, which is super exciting. And
it's kind of it's an industry that's got a bit of a reputation, not dissimilar to the recruitment industry, where anybody can kind of participate in it. And if you've got a TikTok account, you're kind of you're a buyer's agent. What are some of the things that you're doing differently to actually kind of give people a high value experience?
Yeah, well, one of the most exciting things about this business of a buyer's agent is that if I think through what are the benefits that accrue to scale here, they're really clear and compelling on the buyer's agent side of things. What that means is, things like we're able to invest more than anyone into the data that we bring to bear on behalf of our clients. And I think we're seeing some of the most scale buyer's agents in the country, including Aussie and Lendy, making similar investments on behalf of the clients that they work with. And as I think about, like even versus say a mortgage broking proposition versus a buyer's agent, say a mortgage broker, sometimes, the single man operation can get access to the same rates as say, a 5,000 person organization. But in contrast, a single person buyer's agent might only have access to the real estate agents that they work with in the couple of suburbs around them. They might not have access to the best data in the country. Whereas in contrast, you can really invest at scale in those things that are really important to aspiring homeowners. And we're starting to see the benefits really accruing as a result of that investment.
Where can people find out a bit more about OwnHome?
They can find out more about OwnHome at ownhome.com. They can find out more about our buyer's agent at peachproperty.com.au. And they can reach out to me at james@ownhome.com.